So now that we've calculated all the ratios as part of A, we can move on to part B. But before we can start commenting on part B, we need to make sure that all these ratios that they've given us in the question for last year, we have to have them calculated for this year so we can commentate on the trend. We can comment on the trend between last year and this year. So we know we've got last year's figures we've calculated for 2020, or this year's figures 2020, last year's figures 2019. So to make sure that we've got all these figures calculated, all these ratios calculated. So the earnings per share, we would have that calculated as part of number 3 down here when we calculate the current market price. Then the next one is your DPS. So we have that calculated. The interest cover then, the third one, we have that calculated down here as part number 5. Your next one then, your asset test ratio, we have that one calculated. Your market price per one ordinary share, we've that calculated as part of the current market price number 3 of part A. Your return on capital employed, that has been calculated down here as part of number 2 from part A. The gearing is not calculated. The dividend cover is calculated on its own down here as part number 4. And then we have your dividend yield, then we have to calculate that. So there's 4 extra ratios we need to calculate before we can start commentating and finishing off part B. They are your dividend per ordinary share, your DPS, your asset test ratio, your gearing, and then your dividend yield. So let's have a look at the first one, your dividend per ordinary share. So the ratio for your dividend per ordinary share is your ordinary dividends divided by your ordinary shares issued, and that's going to give you dividend per ordinary share. So your ratio, ordinary dividends divided by your ordinary shares that we've issued. So 400,000 or 4,000 is your ordinary dividend. So we would have calculated that back in your previous adjustments back here. Where's it gone to? Yeah, so as part of dividend cover, dividend paid 13,000, preference dividend is 9,000, so your ordinary dividend is 4. So your ordinary dividend is 4 divided by 200,000, so 2 cents is going to be your dividend per share. Your next item that we need to calculate then, as we work down along here, is your asset test ratio. So your asset test ratio then, that's current assets minus closing stock divided by current liabilities. So in the question, your current assets 236,000, closing stock 62,000. You're going to take them away from each other, and then your current liabilities 70,000. So 236,000 minus 62 divided by 70, so 174,000 divided by 70. That gives your asset test ratio of 2.49:1. So remember, the recommended ratio for that is 2:1. Your next item then, as you work down along, is going to be your gearing. So 62%. So this year, your gearing ratio then, we know that there's 2 different types of gearing ratios that we can use. So we got your total capital, which is your capital employed, or your equity capital. So I'm going to use this one here. Your total capital, which is your loan plus debt plus preference shares divided by your capital employed, multiplied by 100/1. So we go back and have a look at our question and see what loan and debt capital we have. So in our balance sheet, down at the bottom, we don't have any loans. We got our debentures, 250,000. We got our preference shares then of 100,000. Those two are going to be added together, and then your capital employed then is 621,000. So 250,000 plus 100,000 divided by 621,000. So 350,000 divided by 621. So your gearing is going to be 56.36. So anything above 50 is highly geared. Anything below 50 is lowly geared. So the majority of our capital is taken from debt. So our debt capital is higher than our equity capital. And then the last one then that we need to calculate then is your dividend yield. So your ratio for your dividend yield is your DPS divided by your market value per share. So our DPS, which we've calculated here already, is 2 cents. Our market value then is 180. So we will calculate that as part of part 3 in part A. So we will calculate our market value per share to be €1.80. So when we come to calculate what is our dividend yield, it's 2 cents divided by 180 cents. So it's going to be equal to 1.11. So that should be above your risk-free investments, should be above your debentures, and it should be above your preference shareholders. But we'll look at that more when we start commenting on it. So when we've finished your part A, then you need to calculate, make sure you got your calculation for each one of these ratios before you can start commentating on it, which is looking at it from the shareholder's point of view. So when you've those calculated, then we can start doing our commentating or start answering part B.